For this mock exercise, we're going to take a look at merchandising operation. We're going to look for missing amounts, determine the missing amounts. So let's look at the question. So this question, we were given two companies and 2 years worth of results for two different companies. And we're given the cost of goods sold section for the most recent 2 years. And what we have to do is find the missing amounts. So the best way to do this is to look at the relationship between inventory and cost of goods sold. So what I've done is I've prepared a short relationship between inventory and cost of goods sold. So first of all, we need to understand that goods available for sale is made up of beginning inventory, and this would have been last year's ending inventory, plus cost of goods purchased for the period. And cost of goods purchased for the period is defined as purchases minus purchases, returns, and allowance. So what this means is returns means that when you, let's say a company buys a whole bunch of inventory from a supplier, and when they open up the packages, they happen to ship the wrong item, so they return it. So that's what they call purchases return. And allowances would be, an example of that would be the supplier says to the buyer, the company, if this wasn't quite what you ordered, and it's similar to what you actually ordered, I'll give you an allowance on, let's say, the price by keeping the inventory. So that's what we call purchases, returns, and allowance. Returns means you return the goods. Allowance means you got some sort of price adjustment. The reason why we want to keep this separately, because we want to track it for management purposes. We want to know what our total returns are and what our allowances are, so that we can better gauge next year's planning and control purposes. Purchase discount, it means these are what we call early payment discounts. The supplier gives you a discount for paying early. We would record that separately from the purchased account. So you got purchases, less returns and allowances, less discount to give us net purchases. Then we're going to add our shipping cost. So these are shipping of goods coming into the warehouse of the buyer. And you only include it if it's what we call FOB shipping point. And what FOB shipping point means, it means that these are shipping costs that are incurred by the purchaser. So if you think about FOB factory shipping point, it means that the buyer pays the freight costs. It's called transportation in. In this case, we're going to record it as freight in, or sometimes called transportation in. Okay, so the total goods purchased would include this freight cost. Okay, now there's another term of shipment. It's called FOB destination, and what that means is that the seller pays for the transportation cost. That means that the sale transfer rights upon the arrival of the buyer's business. So the shipping term actually helps us determine the ownership of those goods in transit, and it also helps us dictate when can the seller recognize the revenue. So for example, if the buyer happens to be a North American buyer and the seller happens to be a company that's located, let's say, in the Far East, the shipping term is going to matter, because if the boat in the middle of the ocean on December 31st, the year ran, right, is carrying that product, you need to know who owns that product. And who owns that product will dictate who pays for the shipping and when can the seller recognize the revenue. So if the FOB destination is a shipping term, it means that if the boat on December 31st in the middle of the Pacific Ocean en route to the buyer, it means that the seller cannot recognize the revenue until the goods arrive at the buyer's place of business. If the shipping term was FOB factory or shipping point, it means that the seller on December 31st can recognize the goods as revenue even though the goods haven't arrived at the buyer's place of business. That's because the buyer has taken ownership when the goods leave the seller's warehouse. So one of the more key important points here to note is that the shipping terms helps us dictate who pays for the shipping cost and where do we record those shipping costs. And we also dictate the ownership, which helps us with revenue recognition. So in this case, you would add the freight cost to give you the cost of goods purchased. So the sum of these two is what gives us goods available for sale. Now, the goods available for sale, some of that will still be unsold, so that would be part of ending inventory. And of course, the ones that are sold is going to be part of the cost of goods sold. The sum of these two should always equal the goods available for sale. So having understand the relationship, we can probably answer this question. So let's take a look at company number 1. So what I like to do is duplicate this chart. So for company number 1, okay, for year 1, we're going to have beginning inventory plus net purchases, right? Gives us goods available for sale. I'm going to call that GAS for short. And then goods available for sale can either be ending inventory or cost of goods sold. So let's populate what we know. We know that the beginning inventory in year 1 is 250. We're told that purchases was 1,500. We've got purchase returns of 50 and purchase discounts of 30. So my net purchase should be 1420, and this answers A. So what I'm doing is I'm answering as I go along. So this one is A. So remember, it's asking us for net purchase. So that would be net purchased, A. Okay? What else do we know? We know that freight in is 110. So I'm going to subtract 110, or add 110, sorry, to give us cost of goods purchased. So this will give us cost of goods purchased is 1530, and that is B. So this really should say cost of goods purchased. So that's really this number here, 1530. Okay? So we know that 1530 and 250 gives us goods available for sale. And that was one of the questions, right? Goods available for sale is letter C. Now, we're told that cost of goods sold is 1480, which means that ending inventory has to be 1780 minus 1480 This means that this is to be 300. And this gives us letter D. Does that make sense? Okay, so we've got A, 1420 is net purchased. Then we've got cost of goods purchased, which includes the freight in, 1530. We know that the sum of these two has to equal goods available for sale. That's 1780. That gives us C. And of course, now that we know what cost of goods sold is, we can figure our ending inventory, which is 300. Now, for year 2, you're going to do year 2 now. I'm going to do the same chart. Okay. So beginning inventory plus goods purchased to give us gas, goods available for sale. And of course, goods available could either be ending inventory or cost of goods sold. Now, we know that ending inventory becomes the beginning inventory of the following year. So this gives us letter E. Okay, because we know that ending inventory of last year becomes the beginning inventory of the following year. Now we're told the purchases is unknown, but we're given net purchase. So net purchase is 1850, right? Okay. Now purchase must be 1850 plus 50 plus 100. So my total purchase must be 2,000. So this is purchases. Basically, my gross purchase is 2,000. Now, we're given, the freight in is not given to us, and total goods purchase is not given to us either. So we've got two missing information here. However, what do we know? We know that, goods available for sale, we know that this is 2,300. That's given to us, right? And this is 400, which means that this has got to be the difference of 2,300 less 400 is 1,900. So this has got to be letter I, cost of goods sold, right? Because that must be the difference between these two. It's got to be 1,900. Now, let's come up with this. So we know that this has got to be 2,000, right? Goods purchased. If this is goods available for sale is 2,300, and the beginning inventory must be 300, this has got to be 2,000. Okay? Now, 2,000. Okay, so let me go through this again. So purchase returns and allowance was 100. Purchase discount was 550. The net purchase is 1850. So if I add this, this must be my total purchases, letter F. Okay. Now, freight in is letter G. Now, how do I know how much is freight in? If my net purchased, so let me write this down. If my net purchase is $1,850 and my total purchase is 2,000, then that means this must be my freight in. And this must be letter G. My freight in must be 150. So let's start again, right? So my gross purchase was 2,000. I subtract $50, which is purchase discount and purchase allowance, to give me my net purchase of $1,850. So this is really my net purchased. My net purchase is this number. My net purchase is $18.50. I'm going to add $150 for freight in. Okay, has to be because this $2,000 has got to be my goods purchased. So this $2,000 is my total goods purchase. How do I know? It's because if this was my beginning inventory and this was my goods available for sale, then my goods purchase must have been $2,000. Okay? So what I like about this diagram is I can see the relationship between beginning inventory plus cost of goods purchased to give me goods available for sale. And I always know that the sum of ending inventory and cost of goods sold equals goods available for sale. So let's try it again for company 2. So under company 2, I'm going to do the same diagram for year 1. Okay, so let me do the diagram again. Beginning inventory plus goods purchased to give me goods available for sale. The sum of these two has to equal goods available for sale. And goods available for sale can either be under ending inventory or cost of goods sold. So let's take a look at what's given to us in year 1. Beginning inventory is 1,000. That's given. What else is given to us? We're not given purchases. So purchases is letter J. But we do know that we've got purchase discount and so our purchase returns and allowance and purchase discount to give us our net purchase of 7210. So this letter J must be 7,660. That must be letter J. Because I need 7,660 minus 300 minus what? They give me 7210, which is my net purchase. Now, less freight in, or add freight in, sorry. Freight in, I'll just go FI, that's letter K, to give me my goods purchase, which is 7,900. So this must be, the difference between these two must be 690. So that's my letter K. And that 7,900 is this number here. So I know the sum of these two has got to be 8,900, and that is goods available for sale, letter L. So this is letter L. Now, I'm given ending inventory of 1450. This must be 8,900 less 1450, which is equals to 7,450. That must be my cost of goods sold, and that is letter M. Okay? So the hard part really is this goods purchased, having understanding of what are the specific puts and takes. But you've got to remember, it's purchases minus purchases discounts and allowance minus purchases returns and allowance minus purchase discount to give you net purchase. Then you're going to add transportation in or freight cost to give you the cost of goods purchased. Once you understand this relationship, then it's all fairly easy. Now, let's look at year 2. Year 2, again, I'm going to set up the same diagram. Beginning inventory and goods purchased to give me goods available for sale. Ending inventory and cost of goods sold. So let's look at this again. What's given to us in year 2? Beginning inventory is unknown, but we know it's got to be 1450, right? It's got to be 1450 because we know that beginning inventory has to be from last year's ending inventory. We're given purchases of 9,550, less purchases, returns, and allowance, less discounts to give us net purchase of, so 9,550 less 400 less 100 gives me 9,050, and that should be letter O. So this is letter O. Okay? Now I'm going to add freight in of 550 to give me letter P, which is 9,600. So that's my purchases, goods purchased. So again, having these two allows me to calculate my goods available for sale, which is 9,600 plus 1,450 to give me 11,050. And this is letter Q. Okay. Now, what's given to me? I know my ending inventory is 1,250, which means that my cost of goods sold must be 11,050 minus 1,250 to give me 9,800, and that's letter R. Okay, understanding the relationship between these accounts will help us solve for the unknown. Thank you.